Okay, good evening. This is the second part of the video. I was looking at the $ SPX daily chart, and there's some interesting things here. Of course, I told you I said this when the market was trading near its highs. I wound up buying puts on the SPY at 121. I held them to high 107s on the SPY, so I got that trade right. But I originally anticipated that we were putting in a head and shoulders formation, which is very bearish. The neckline would be around 1040. If that scenario plays out, we rally to 1150. Now, could the market go higher? Of course it could. Actually, there are some other Elliott wave scenarios that I saw where the market could actually go all the way back to its previous highs at 1500. There's another one where it could go to approximately 1300, and then it would be into like a flat correction. Basically, then you'd have a massive correction to retest the lows over the next couple of years, but you wouldn't actually make new lows. In the scenario that I mentioned with the head and shoulders, if that plays out, that's probably the most bearish one. That means that we're probably going to go much lower than the 666 March 2009 lows, just to give you a little longer term perspective. Now on the short term, the MACD histogram has been ticking up for the last 10 or 12 sessions, really, since the fat finger sell-off. The MACD histogram, you had it went past -10, and then you had that rally on the European bailout for a few days, and then we came all the way back down, and we actually made new lows. But the histogram has never exceeded -10, and now it's been ticking up for the last 5 sessions. One thing to note is that the volume has been declining of late, but if you look at the last 5 sessions, you'll see the on the bottom day where we actually hit 1040, the volume was actually the 2 days before the bottom day we had a huge volume day. The low was approximately 1058, and looks like we closed above 10, around like 1090 or so. That was high volume. Then the next day we gave back a little on much lower volume. The next day we actually that was the day we actually put in a low, and that was lower volume than the bottom day 2 days before that, but it was still on a high side. Next day we rallied, and then we sold off hard at the end of the day, and that was still lower volume than the up day before that. The next day we have a big gap up. This was Thursday. The volume was low, but then today you have a sell-off, and the volume was lower than Thursday's volume. So it's interesting to note that the volume is declining, but you can't expect the volume to stay at the capitulation levels, and the volume is actually higher on the up day than a down day. So it's actually it's bullish, and the histogram is also bullish. The fact that you never exceeded the low on the RSI, so you have like a positive divergence on the RSI, that's bullish. The MACD histogram is bullish, and the fact that the stochastic has a 34 and 28 reading and is pointing up, that's also something that needs to be respected. We also have positive divergence on the Chaikin money flow from the February low to the May low. So there's some factors in here that you gotta respect the bulls. Governments may realize that once we head into the deflationary spiral, it's pretty much all over. I mean, there's going to be countries going bankrupt. Real estate's going to collapse. Banking system is going to collapse. I mean, if that happens, it's going to be very bad, and the market's going to go very low. But that's pretty much what is going to happen eventually. Um, but governments may keep printing money, and they may actually drive the markets, back to where they were in that 1500 scenario. But in reality, because the currencies aren't worth anything, it's not really going to do anybody any good. It's just going to be, I mean, it might be good for some people that are traders and stuff like that, but the cost of living is going to soar. And it's going to eventually lead to the deflationary crash. And the problem is we have too much debt. You can't get out of debt by taking on more debt. Um, so as far as trading goes, I'm anticipating the 1150 shoulder to form, and I will probably buy some puts up there. I'm sure there's going to be a shorting opportunity there where even if it does exceed 1150, I think there will be a pullback to some area. So I will test that area. Um, but a lot of people are. I'm starting to hear it in the media that people are calling for the head and shoulders, and that's actually scaring me a little bit that I might be wrong, because as soon as the masses start anticipating something, it becomes less likely to happen. Um, so anyway, just pointing out these bullish things. I'm long-term bearish, but you can't deny um, these bullish technicals, these somewhat bullish technicals. Now the MACD has a negative divergence on it. I mean, as far as from the February low versus the May low, and that may supersede all the other somewhat positive technicals. But you have to keep your eye open, and you have to realize that they can push a lot of these debt issues off into the future. And in the meantime, the market's going to rally if that happens. Because if people start forgetting about the Greece, what's going on in Greece and what's going on in Portugal and Spain and United Kingdom and whatnot, if people start forgetting, if the media stops talking about it so much, I mean, it's possible that they could prop the markets up a little higher. Um, just always respect the market, even though what you're thinking may be right, it may not pan out for a while. So there's the old saying: the market can stay irrational longer than you could stay solvent. I've learned this lesson myself on a number of occasions, where usually what I'm thinking is right in the end game, but in the short term, when you're trading and you're trading with leverage, if you're wrong, you could get wiped out, or if you have options, they could expire worthless. So just keep that in mind, and take a look at what I'm saying about the SPY, and come to your own conclusions. I think we're going to get a bounce. I definitely would be. I wouldn't advise shorting, except for like today. Like today, it got it overextended. You could have shorted in the pre-market. It was a good opportunity. If you're able to watch the market and be nimble enough and you're nimble enough to seize the opportunity, yeah, there's opportunities. But I would be very careful holding shorts right now. I mean, it looked like the market was going to tank on Wednesday. After what happened on Wednesday, the market going higher, and it was just selling off like crazy, and there was all these rumors and stuff, and then they gapped it up 200 points the next day. So it's very dangerous to be short. You gotta wait. You gotta wait for your opportunities. Wait for good buying entries or selling entries, and try to minimize your risk. That's pretty much the name of the game, and then managing your money. I'm very good at seeing opportunities, but I'm poor at managing money, which is probably more important. I work on it. It sounds simple, just being disciplined and stuff like that, but easier said than done sometimes. But in order to really keep your trend steady, you're going to need to come up with some controls and discipline. All right, that's all I have to say, and have a good weekend.